Good morning, everyone.
Good morning.
Hello.
Good morning.
Hello. How are
I'm
you?
here.
Son, welcome back.
Yes, I come back. I'm here.
Hey, good morning, guys.
Always present.
Oh, my
Almost.
present.
Good morning, guys.
Hello.
Good morning.
Welcome to the new president.
Oh, not yet.
Welcome. Chicha, you are happy?
No,
You are, right?
no.
Ah, Chicha,
Not happy.
please. No, Chicha, you should be.
No, let's see. No, let's wait.
Wait for what? He's elected. That's it.
No, they have to go through if it's they any fraud or not.
This is bullshit.
I don't think they can do
He
something.
doesn't know how to lose. That's why.
No, but Biden too old to take over. You know.
And Trump is it's young.
No, but he's strong enough to take care because Biden look like very old. You know.
Teacher, this is racism with his age, please.
No, not racist.
Leave the man.
Yeah, let's
In Brazil, we say accept that it will hurt less.
Oh, okay. So y'all can, I mean, in Brazil they refer Joe Biden.
No, our president is in favor of Trump.
Okay.
Unfortunately, sorry, but I am.
In my opinion,
Biden.
regardless of the anything, we have to respect it, independent of the president.
We have to accept, right? Like people accept Trump, so what can I do?
If it was Trump or Joe Biden, it's independent. We have to accept that.
Well, we more than ever. We don't vote. Do you vote, teacher?
I did. Yeah, I vote.
Yes. Yeah. We don't vote, so like we have to accept. Really.
Oh, okay.
Yeah, exactly.
Yeah.
Like for us, we can be happy or sad, but doesn't matter.
Yeah. Yeah,
I
vote.
Not change anything.
Yeah.
What's the agenda today, teacher? She disappeared. Daqui a pouco ela vai me expulsar dessa sala. The
Okay, everyone. So first up, morning. So I will go through chapter 8, PowerPoint, maybe half an hour, and then we'll correct project 6, okay?
Okay.
So chapter 8 will be about, they talk about inventory and cost of goods sold. Okay. So what is inventory? So you see, they give you an example of upload where they don't manufacture the products. However, they buy the stock, they buy the products, the merchandise from the wholesaler, and they give them into their warehouse. Okay, so this is called inventory. So inventory, you expect that it will convert into cash because you sell that inventory into the market, right? So when inventory is sold, the cost will be recorded on the cost of goods sold in income statement. And if you look at balance sheet, they will list, okay, cash, cash, right? Cash and cash equivalent, account receivable, and then inventory. So you will see that on the balance sheet. So the flow here, we already know, okay, first off, when you buy the merchandise from retailer, You put that value on the inventory on the balance sheet, okay? And when you take the inventory to sell to the customer, the cost will be transferred into income statement and show as cost of goods sold. We all have to this one assignment already on project 4. So you ask yourself, okay, how, because when you buy merchandise, let's say one day you buy 1,000 items, another day you buy 200 items. So they may have different price when you buy from the supplier, right? You buy different date, maybe from different supplier and in different quantity. So this chapter will go into detail in terms of, okay, I have a bunch of inventory. How should I know, okay, how much price or what is the price that I should apply to specific item? So they have an inventory subsidiary ledger, just kind of detail. Okay, if you look at here, January 5th, right? They purchased 2 items. One item cost 1,000. That's what the total cost is, 2,000. So at the end of January 5th, you have 100 items in your warehouse, right? Another days, you buy 3 items. And again, the price not necessarily the same as you bought on January 5th. The price goes up 12,000. 1,200 per unit. So the cost now is 3,600. So you on the balance it show it, okay, 2 items for 1,000, but the 3 items that you just bought on February 5th, this is 1,200. So you notice that on February 5th, right, the balance show here as two layer. One layer is from the February 5th, 1,000 each, and the second layer is 3 items, 12,000 each. So when they deal with inventory, there are some term or there are some method that they use to calculate the price per unit of the inventory. The 3 most common one is average cost. FIFO. FIFO stand for first in, first out. Okay, whatever the products come in first, when you sell it, you will take that one. Or the opposite way is that last in, first out, or they call it at LIFO. The one that you just buy and keep in your stock will be the first price to use when you sell it. Again, they will give you examples so that you easier to follow. The first method is average cost. So basically you will average them out. Okay, so for example, the previous example, one day you bought it wood for the cost is 1,000 each, and another it cost 12,000 each, 1,200 each. So take that average 1,000 plus 1,200 divided by 2. That's the concept of average. Okay, so now they give you an example. So on January 5th, they bought 2 items, right? An item cost to 1,000. So the average of the cost is per unit is 1,000. After the purchase on February 5th, they have 5 items, right? 2 plus 3 is 5, and the total cost is 5,600. So that's why they will take right here. I guess that will be easier if you follow this way. Okay, so when they apply the average method, you will see that, okay, at the end of February 5th, I have 2,000 plus 3,000 is 5,600, right? So this cost E4, how many units? 2,200 units. So if you, when you do the average, you will take 5,600 divided by 2,200. How much you get? So you get around 2.50. So let's say on the February 10, right? I bought some customer come in and say, okay, I want to buy 3 items from you. So the price I use for that sale will be how much? Oh no, why? Sorry. So 5,600 divided by 5 units. I took the wrong line. So 5,600. That's the total cost here. I will divide by the total units I have in stock. That's a 5 units, right? So that's why when you sell it, the cost of goods sold you will be 1120. So not 1,000, not 1,200. I will use 1120 instead because I using average cost method. Okay. So when you use the average cost method, they give you an example here. After you calculate the unit per unit cost of goods sold 1120, March 1st, one of customer come to you and they want to buy 1 item, and you sell them in the market at 1,800 per item. So you get cash in and you get revenue in. So that's why cash, debit, and sale also credit. At the same time, because now you sold 1 item, so you have to reduce your inventory by 1 item, and the cost of goods sold will be increased 1120. So that's the picture of, okay. I start with 2 items and 3 items I purchased in, right? On March 1st, I sold it. So I show it on the column sold. I sold 1 unit cost 1120. So the cost of goods sold I use is 1120. At the end of March 1st, I start with 5, I sold 1, I have 4 left, right? So I used to have 56, I sold 1. My cost of goods sold on my inventory value at the end of the day, March 1st, will be 4480. So that's the average cost method. Any question? No one? Okay, so the second method that they usually use is first in, first out. Or sometimes you will hear people say, okay, I use FIFO. I mean first in, first out. Okay. So now go back to our example. So on March 1st, right? Customer come to you and say, okay, I want to buy 1 item of the product from you. And if you use first in, first out method, the purchase that you first the one that you first purchased in will be used the price that will be used. So basically between the purchase January and February. January happened first, right? Because it happened first, I will use it as my units cost. So in this case, the cost of goods sold I recorded or I use will be 1,000. Okay, so that's they mean in terms of first in and first out. Whatever bought first, that price will be used. Okay. So that's why you see here, when they sold one item, they will use 1,000 as cost of goods sold. Again, example here, it's just a inventory subsidiary ledger. So on March 1st, right, I sold one item and the cost I use is 1,000. So at the end of the day, I sold one item, right? I sold and I take this from here. I took one of two, so that's why I have one item with the cost of 1,000. Three, it will keep the same because I didn't show it. I didn't take from this bucket. So I still have three items of 1,200. So if you took 1,000 plus 3,600, you get 4,600. So if you look at here, the ending balance, right? The ending of inventory under average 4480 and under FIFO is 46. So that means when you use FIFO, the ending inventory tend to be higher. So assume that they sold four generator to the customer instead of one. So how will you factor that? So instead of they sold one, they sold four of them. So the first step you take, okay, first in, first out, right? Okay, the one that I bought first, I will use first. I will use two items for $1,000 per unit. And because I sold four, right? I already sold, I have two, I need to get two more. So I get two from this bucket. So again, the cost of goods sold will be 2,000 and 1,000 per unit plus two items. And the price is 1,200. So if you sold four items, the total cost of goods sold will be 2444. Okay, 4,400. Okay. Again, whatever first comes in will be used at the price, will be used at the unit's cost. So right here, you will see that, okay, I will take two items, 1,000 each, and two items, 1,200 each. Total will be cost of goods sold 44. The opposite one, not the opposite, but the other method kind of work the same way. It's called last in, first out. So what for last in, first out, whatever.
Teacher.
Yep.
Just, I want to ask something. In this like FIFO thing, like
FIFO?
two generate, like you bought two on 1,000, two on 1,200, and then you have 4,400 as the cost of goods sold.
Yeah.
In this case, these things like the generators are already sold, or they are still in the inventory?
No, that's the stuff that you sold. So at the end of this transaction, you will have 0 from this bucket, right? And you have 1 item left. So 1 item left, the price of 1200. So that's it. The ending of this transaction will be 12. You have inventory of 1200 in your store, in your warehouse, and 40.
Okay, is there like some kind of companies that prefer to use the FIFO or LIFO,
Yeah.
or how is?
Company usually use FIFO because it's just easier to keep track. Yeah, LIFO is better, not better, but more popular, and some use average.
Okay, thank you.
Yeah. The reason why you I will explain why they use FIFO most of the time. For last in, first out, okay. Whatever come last will be used first. That's what we understand. Last in, whatever you bought, the most recent will be used for your calculation. So example, how much this choice? Okay, 1 item only. So this example again, okay. Instead, you use LIFO. LIFO. So amongst these two transactions, right? The most recent that you you bought is February 5th, right? And on February 5th, you pay 1200 each. So that is the price that I will use here because I say last in and first out. This is come last, I use it. So if you sold 1 item, the cost that you will use is 1200. So that's, you will see that the difference between when you use last in first out or first in first out. So you see here, after my transaction, right, I have these two still the same. These two will be kept at normal because I didn't take any from this bucket, okay? This basket, I didn't use it. I use 1 of this. So I have 2 left with the price of 1200, okay? So you have, that's why the total that you got is 4400. So if we make a quick comparison, okay? The cost of goods sold, I have 3 ways to calculate, right? One is average. One is first in, first out, or you call it FIFO. And the last one is last in, first out. I try to compare the cost of goods sold of these 3 on the transaction. Or you can use balance. I guess I compare the balance better. So at the end of the day, you have 44 per LIFO. How much for averaged? Average 44.80. This is for LIFO. FIFO will be 46. So if you see here, you see the same number, but when I apply different method, okay, the balance, the inventory, my inventory balance are different. So the average per average method, I have 44.80. For FIFO is 46, and then LIFO will be 44. So if you see that the FIFOs always, not always, but most of the time will give you the higher inventory balance after you sell. So your question will be, okay, when should I use, what is the pros and the cons of each method, okay? So you can use, depends on the companies. You can apply, you can pick one of the method for your company, okay? So you have to figure out, okay, which one is work the best or the easiest way for your company to keep track the inventory. And they allow different flow assumption, maybe used for different type of inventory in different location. So the three items that we just use, the three method we just use in for the companies that have a high volume of inventory. Like you see, you have a high volume of, let's say Amazon or Lowe, for example, they have a big volume of inventory. However, for example, if you have a jewelry store, right, or you have a car, you have a the car dealer. These are high price, and compared with the other, it have a lower volume of items. So in that case, they will use specific identification. So for example, the car dealer, whenever you go to buy the car, they will ask you, okay, what is the vehicle number of that car that you're looking for? So by entering the code of the car, and they go to the end, go to their computer, you give them that number, they can easily pop up the car for you. What is the feature? What is the price, and so on. So car dealer is a good example of specific identification inventory flow. So the pros of that, it will be appropriate. It will be very convenient for the company to keep track the high price and low volume item. It's easy because whenever you give them the ID, they can easily pop up the number for you, pop up the identification and on the character of the car for you. The cons is that the flip side of that is not practical. For example, it will be not easy for a Amazon warehouse person when they just give you the number and they pop up the the description of the inventory, because they have too much inventory to keep track. Okay. In terms of average cost method, what is the pros and the cons? The pros is that if you have the same products, the same lines of products, or the same type of inventory, average cost will be very easy to keep track, very easy to calculate. Okay, so that's the good side of average cost. The bad side of that, because you do an average out, so sometimes the price that you use is not I mean objectively reflect like the change of the price. Okay, especially when the price going up or down very quickly in the market. So that's the con. FIFO. FIFO, when you in this case, okay, go back to our example. So the first time you purchase, it cost you only 1,000. The second time you purchase, they cost you, I mean, they charge you 1,200. So that means it's go up, right? The price of the inventory is going up. Where is that? Okay, so that's what they mean in terms of inflationary. So that means when, okay, day one you buy lower price, day two you bought it, you buy it with higher price, say inflationary. So at that time you will report a higher profit. And the balance sheet inventory will value at the recent purchase cost. So basically it will show kind of quickly the real change of the market price compared to which average, you just everything just average out. With FIFO, it will show kind of the most updated the balance sheet of, I mean, the inventory on your balance sheet will be valued at the recent purchase cost, which would make more sense. However, the flip side of that is that because you report a higher profit, you will end up with paying higher tax. So that's the good and the bad of FIFO. LIFOs, the good side is that they may lower profit, would lead to lower income. However, it's not it's not accordant with the physical flow of merchandise, because you took whatever the latest sale and the latest cost of inventory to use for calculation. And the valuation of the inventory on the balance sheet is comprised of the earliest acquisition cost. So each of the method have the cost, have the good side and the bad side of that. So they give you a summary, like a summary of what is the most, again, not right or wrong if you use the one over the other, but you have to take into consideration, okay, what is the best one for me? What is the best? Depends on the industry, depends on what kind of the products, depends on the prospective of the price in the market. Okay. So if you look at here, specific identification you usually use for the higher value and low quantity item. It may be misleading when the units are identical. Okay. Average cost will be assigned the same price for on the unit. Okay. First in, first out. May overstay income when the price going up, and may increase the income tax due. Again, may. So depend on whether the price going up or going down, but in reality, most of the time, right, you see it's usually going up. Last in, first out. This is the most conservative method during periods of rising prices and often result in lower income tax due. Just for your information, if your financial statement using GAAP, generally accepted accounting principle, they accept both. They accept FIFO and LIFO. Okay. However, if you follow the standard of international financial reporting standard, they don't accept LIFO. You need to use FIFO. So that's why in terms of popularity, FIFOs are used more often. Whenever you use any kind of flow to calculate, this must be consistent. What does it mean by consistent? This principle means that the company choose or select one of the accounting method, it must follow consistently rather than switch from year to another year. So let's say you want to use average. Year 2, I want to move to FIFO. No, it's not accepted. So whenever you choose, you kind of need to keep it consistently. Although if you show that, let's say you show to IRS saying, okay, because they a change of my product flow or something different, something changed in your organization, another method may be more reasonable for my company, then it's in that case they may allow you, but per the principle of consistent, you have to keep it consistently.
Teacher.
Yep.
It means that they will never be allowed to change, or they can change.
No, they can change. Yeah, they can change if they show that they are the reason why another method is more reliable, or give them more or better result, better more objective, then they're able to change it. But they will not be, okay, this year change, next year change, the next year change again.
Okay, thank you.
Not able to, but not like you cannot do like all the time. It's just the same way with depreciation. The IRS allow you to change. However, when you change, you have to fill out in the form that explain why you change it and what would affect the tax amount. Yeah, you see here, the principle doesn't prohibit. That means they don't prevent you changing the accounting method. But if a change is made, the reason must be explained on your financial statement. Just-in-time inventory system. This concept starting from Japan, where they try to increase the efficiency, because they just in time, basically you don't want to keep too much inventory in your warehouse, because when you keep too much, number one, the cash is there, right? Because inventory means cash, you buy and you just stock too much item. And as we remember, inventory may have a loss of chance. Okay, number one, being got stolen. Number two, maybe get obsolete. So you just want, the concept is that you just try to keep good enough amount of the inventory, good enough to have stock to sell, but not too much to prevent from the inefficiency. So it's just more of the concept. Inventory count, again, usually at the end of the year, December 1st, the last couple weeks of December, the auditor usually go down to the enterprises and do physical count. Okay, so another term that you need to understand is write down of inventory. Most of the time, the cost for example, you keep the inventory for a long time and that kind of product didn't sell very well, and then you have a large amount of stock in the warehouse, it becomes obsolete. The price, the value of the inventory going down. So the accounting method, the accounting allow you to, let's say when you bought it, inventory is you show on balance sheet is 10,000. However, the value now is going down. Probably it's only have 6,000 value left. So they allow you to write the value down so that it's correctly reflect whatever on your balance sheet. Lower cost of market. So this concept, a case can be made that no economics resource is worth more than its worth cost to replace it. So you see two parts here. Low cost or market. So basically they will take the lower between the cost that when you buy the inventory in and the current market of the same inventory in the market, okay? So basically you have to do the comparison between one is the cost and the market value. Let me see if they give you example. Okay, they give you example here. Yeah. So they have two types of inventory, two type of item here. One is ski equipment, and another one is ski accessory. Okay. Under FIFO method, your total ski equipment, the value will be 20,000 of the inventory. If you use the market value, it's 21. So if you apply the lower cost or market basis, you will see that, okay, I will compare between 16 and 18, which is lower, 16, right? So that's, I will use at my basis. You compare 4 and 3, lower is 3, right? So that's the concept of lower cost or market. Again, this is just for similarly, it worked for the second category. They take the price between 24 and 15, the lower is 15. So that the lower cost or market. So the inventory is valued as the lower of whatever you bought in, the historical cost and the current market cost. Good in transit. So that's some term that you need to understand, especially these terms especially important when you, let's say in December, that's the most of the time we have a lot of sale. You sell the products you sell the product to customer, or you buy a lot of stock for you to get ready for the next year, right? So the question may arise when the good in transit. So for example, Mariana have a company, right? She will ship our customer place an order on December 25th on Christmas for example, to buy 10 cars. However, this car didn't arrive to my warehouse yet. It's still in the transit. So how do I know that these 10 cars, should I keep it on Mariana books, or should I, as the buyer, should record it on my accounting record? So in order to answer that, they have to rely on the term of shipment. Okay, so these two terms are the most popular term that you use in the reality, in the real life. One is called FOB, free on board shipping point. Shipping point means is the point at which you ship the products to the buyer. Okay, or FOB, free on board destination. Destination is maybe probably the destination warehouse. It can be destination if you ship by the sea. It's probably the destination port, right? Like the when you ship on the through the sea, via sea instead of using car. If you do import and export, this term is the kind of normal friend because you deal a lot with these two. Free on board shipping point, they tell you that if you sell, let us say that, okay, when I sell the product, let us sell 10 cars, okay? One car is 10,000. And I agree with the buyer, say, okay, I will sell you with the term FOB shipping point. Let's say FOB Newburyport. So you have to, you start shipping the products from Newburyport. So the title of these 10 cars, the title will pass at the point of the shipment, and the good are the property of the buyer when it transit. So let's say for some reason, right? These 10 cars get damaged for some, like unluckily that these 10 cars, you have an accident and then these 10 cars totally lost. Because you sell this item under free on board, the buyer will have to take care of this loss. Okay, so it's very important that what term that you use when you sell the products. Vice versa, if I sell exactly the same 10 cars, right, but I use FOB destination, the title will not pass to the buyer until the product go to the destination. That means is that if something wrong with these 10 cars during transit, the person who responsibility is still the seller. Okay, so that's, you see the difference between the same term, but the detail here is very important. Shipping point or destination. If shipping point, the title passed to the buyer. Whenever, if something wrong in transit, buyer will take care of, will be responsible for. Vice versa, if you use destination, the seller will be responsible for it. So you have to make sure that which term that you use. Yep.
It is most like only used for cars, or there is another?
No. Applebee can you can use for car. You can use for
Okay.
transportation by what by the sea. They use the ship.
Okay.
Or can be aviation too. Aviation like the airplane, the freight. That's why usually the price of Applebee destination usually higher. When they quote the price Applebee destination, the price usually higher. The Applebee shipping point is lower. Periodic inventory system. You remember we have two kind of inventory system. One is periodic, one is perpetual, right? Under periodic, okay, they will count the inventory once a year. It's applicable for the company that doesn't have a lot of inventory, okay, and they use the formula that we use in our calculation. What is my beginning, right? And I will add whatever the purchase, I purchased more during the year, okay? And I subtract whatever I have in my warehouse. I will know that, okay, what is my cost of goods sold, whatever cost that for the product that I sell already. That's periodic. So they just kind of remind you that what we learned from previous chapter. This one average, that's fine. First in, first out. Whatever comes first, you use first. For last in, first out, whatever comes last will be used first. Okay, that's what you just need to know. Again, like I tell you, if you have some international item in your, element in your business under international financial reporting, they will ask you to use FIFO. That's fine. We don't use that. This one just show you of inventory error impact. We can skip that. Okay. So the gross profit method, when they talk about gross profit, so it will be sale minus cost of goods sold. Okay. So per gross profit method example. So your beginning inventory 50, you purchase 20,000 more, so you get 70 available for sale, right? And now you have to calculate, okay, how much the cost of the good that I sold. And they use 60% here as cost ratio. So that's why the estimated cost of goods sold is 18. The ending inventory is 70 minus 18. This will be 52. Again, they will just use the kind of the flow that we use, beginning plus purchase. So I have my ending, right? I'm sorry, minus my ending. I will have cost of goods sold. As long as you know this flow, you can plug in. Sometimes they ask you what is the ending. Sometimes they ask you what is the cost of goods sold. inventory analysis. So you will see so for example, when you have sale, right, you have a term, say account receivable turnover. For inventory, they have inventory turnover. So inventory turnover, basically, you take cost of goods sold divided by average inventory. And in order to get inventory and of the average, you just take the beginning, what you had at the beginning, plus what you have at the end. You divide by 2. So the bottom line, that's what you need to know about inventory analysis is that, okay, for example, they say my company has an inventory turnover day is 18 days, for example. What does it mean by 18 days? So when they say that, they try to indicate that it takes my company on average 18 days to convert cost of goods sold into sale, convert inventory into sale. That's what it means of inventory turnover. That's what you need to know. Let's just give you an example of how to calculate it. So in order to calculate, okay, first inventory turnover. So you take cost of goods sold divided by average inventory. So you come up with 603 times. And in order to calculate per day, in day, so you take 365 days per year, divide by 6.03, 60.05 days. What it means is that, okay, it takes, on average, it takes my company around 60 days to convert inventory into sale. That's what it means. Okay. So if this number, the lower the better, okay, because that you're able to convert whatever inventory into sale. So that's for projects. I'm sorry, chapter 8. Anyone else have question? Or anyone have question?
No.
No. Okay.
Not now.
Not for now, right?
Not yet.
Not yet. Okay. I guess they will ask you some theory question in the probably about inventory in the quiz.
It's gonna be all like the other one, like more theory than
it should be more theory.
Only theory, right?
Let me take a look. I didn't look at yet.
It's next Sunday, right?
Next Saturday.
Saturday?
Next Saturday for the review.
Okay.
The review on Saturday
Okay.
and the quiz on Sunday.
Hi, you. Good morning.
Hello, Sydney.
What time is next time? Oh, no, not far.
Break time 11.
11?
Yes.
So far.
Too far, right?
Take your mind.
Yeah, it's mostly theory. Mariana.
Okay.
Same way that we did last time. Yeah, theory. I will go through that. Hopefully after you guys do the project, and because I need to do need to have the review for Monday class. So if I complete the review for them, I also post one for us on the Moodle, and I will email all of you so that you know that you have that.
Teacher, there was an earthquake this morning.
Oh, really? Where?
Here. In South Massachusetts.
South Massachusetts? I didn't, maybe I sleep so deep. I slept.
I didn't feel anything either, but some people like in my city felt, so I don't know.
Maybe some area more,
yeah, it was 4.0
more than us. Yeah. Wow. Scary, huh?
Yeah.
Yeah, one time I back in my country when I study at the university and it's just shaking. I thought the guy behind or the friend behind doing something, but when I couple minutes later on realized that there's something wrong. Too heavy. You can feel the difference. Okay. Go to your project 6, please. So that's the goal that we need to finish today.
Teacher, why don't you have a break now and then correct this 6? Because the 6 is gonna be long time.
Is it 6 long?
Yes, it is.
1, 2, 3, 4. Okay, so you can, why don't just you?
I think it's better.
Yeah, so take a 15-minute break. So come back around 10:20, and then we take care of the rest of today. Okay, everyone.
Can you open a new room
Okay.
from?
Open breakout room.
Yeah. Thank you.
Yep. Password room. Hassan. Fernando.
Yes, you.
Leo. Mariana.
Leo, Mariana, Rodrigo,
Maxwell. Oliva.
Oliva,
Oli
Tachi,
Henrik.
Rodrigo,
Rosianne.
Yeah, teacher.
Hi, Leo.
Hi, Sydney.
Good
Sydney,
morning,
how are you?
Leo, gente boa.
Sydney
Hey.
always present.
Okay, everyone. Please take a break. Come back at 10:20, and I will correct project 6 for all of you. Okay.
É carro de garagem.
Peraí que eu vou colocar uma carne passar ali, peraí.
Esse de uma figuraça, viu?
Puta que pariu, bicho.
Vocês são demais.
Esse Rodrigo é foda. Ô, caralho, te entreguei.
Okay, let's open project 6 so that we can finish this one. So we only have one more project to go. Again, everyone, project 5 already have YouTube video. So you let me resend for everyone. You can just visit that, follow the step to finish. Okay, project 6, question 1. Kiwi service station are considering expanding its operation to include the radar, how to pronounce, whatever area, rather than build a new service station. Management plan to acquire existing service station and convert them into Kiwi outlet. So what they try to sell, they tell you is that they want to expand the business instead of build up a brand new one. They just buy something that existing in the market. They have two options. Okay, either they will buy Joe Garage or they will buy Gas and Go. So each of the item they give you, okay, the rate of return of the net assets. So that means, okay, if I invest into Joe, I will get 20% of the return. And the same with Gas and Go, I will also get 20%. However, the face value of net intangible assets. So the fair value of the Joe Garage, 950, the Gas and Go, 980. Actual average net income for the past 5 years of Joe Garage, 220, and Gas Station, 275. So they ask you to compute an estimated fair value of any goodwill associated with Kiwi, purchasing Joe Garage. Based on your computation, upon and assume that successful service station typically sell as 9.25 times their annual earning. Okay, so they try to ask you, okay, what is goodwill? So goodwill, you will calculate when you compare the assets, the value of the assets that one business have compared with the fair market value of the fixed asset. So if they had a different, that is called goodwill. Okay, goodwill just example like, okay, like Coca-Cola, right? Assumingly that their fixed asset total is 1 million. However, if Coca-Cola sell the company to someone, that company evaluate Coca-Cola is 2 million, right? The fixed asset only 1 million. However, they agree to pay because beside their assets, they have the trademark, they have the reputation, and so on. So these are the value of the goodwill. In this case, they ask you to calculate it. So my first start will be what? You see here, they say that normally, okay, they will sell at 2.5 times their earning, their annual earning. And if you look at here, the Joe Garage, how much per year they earn? 220, right? $220. So my starting point will be 220,000. They say 9.25 times. So if I take this one multiplied by this one, I will get 2, 0, 3, 5, 1, 2, 3, 0. Okay. So this number is my kind of my value, the company value, the Joe Garage value. Okay. So you have to combine this number with what the market tell. The markets tell you that, okay, the total assets of Joe Garage have a value of 950. So if you take 2,035,000 minus 950, the difference will be the estimated goodwill. So it will be 1,085,000. Okay, and that should be your answer. So I will key here 108500. Okay, everyone?
Okay.
Yeah.
Yeah.
For now, yes.
For now, yes, okay. So I will move to the next one. So the next one, they ask you again, estimated the goodwill. However, they use kind of a different criteria. Compute an estimated fair value of any goodwill associated with QV purchase Gas and Go. So now you taking care of Gas and Go portion. Base your computation upon an assumption that QV management expect its earning to continue for 4 years. Okay. So if you look at here, my starting point is average net income for the past 5 years. So historically, every single year, I make 275. Then you see here they say estimated normal rate of return on net assets, and they give you the value of net assets. So I have to addition of every year, right? I got 2% over my assets. So you multiply by 980,000. So how much you get? So I took 2% of my 980. So 196. 196 plus 270. Mistake here. So I started with 275. $980 multiplied by 2%. Because my assumption, they say they use the assessed earning as the criteria to calculate the estimated goodwill. I should subtract instead of add because they use the assessed earning. So whatever your real number, 275 average net income, I subtract out the estimated return. So that will be my assessed earning. My assessed earning. Okay. So if I do that, I should have 79,000. That will be my assessed earning. Okay. So per year, I got an assessed of 79,000, and they say here it will be continued for 4 years. You multiply by 4. So it will be 306. So that will be your estimated goodwill. Okay. Anyone have any question?
Teacher,
Yeah, she.
what is the rate of return on asset?
Rate of return of assets mean, for example, the rate of return mean, for example, when you invest 10,000, they tell you, okay, if you invest 10,000, the rate of return will be 10%. So that means every single 1,000 that you invest in, you get 100 back. I mean, you generate a return of 100. That's mean of rate of return. The percentage that you gain when you do some investment.
So you use the net identification asset multiply the rate of return on net asset can get the answer for the return earning?
Not return earning. No, not return. Basically, they say that, okay, with that amount of assets, you able to generate this kind of income. Not return earning. Return earning mean everything. Does it just talk about income? Return earning must be income after expenses.
Oh.
Okay.
So use this rate, you can estimate the income, right?
Yeah, just estimate the kind of the return that you can make with this amount of assets. Is it what your question, G? Yeah, not retain earning. Just imagine that you invest stock and they say, okay, if you invest 10,000 stock, you get 10% return. That means with this amount of assets, I can make $100. But then after that $100, you have to, okay, when you invest, you have to pay the brokerage fee. Then you back that out to get into the final retained earning.
Okay.
It's just
But-
the gross, it's just the raw sale. It's just the raw income that they get based on what assets they have.
And when you use this formula to get the estimated income, but why you use the average income to subtract the estimate income?
Okay. You mean why I take 275 minus? Why don't I use 275 right away?
Yeah.
The reason is if you look at here, they try to ask you calculate based on the assets, the assist earning. Assist earning means the difference between your regular revenue, your regular income, your net income, which the estimate amount that you may able to create based on the assets you have. Because they use the assist, because if you see here, assist earning.
Oh.
That's why we have to calculate the assist earning, and they say continue for 4 years. That's why we multiply by 4. They didn't say, okay, use actual average net income. They say assist earning.
Okay.
Okay. Excuse me. So that's why we get 316. So I can move to question 2, right? So question 2 is just the same way that you calculate the depreciation. Instead here, because a natural resources, they use the term depletion. Okay, so we start, okay. Amazon company, they have a real silver mine. The cost is 30 million, okay. They estimate that the mine will produce 400,000 tons of ore and have a residual value of 7 million. During the year, 115,000 tons were removed from the mine. At the year end, what is the book value of mine? So basically you will just imagine as a depreciation assignment, okay? So what is my starting point? My cost, the mine is cost 30 million, right? At the end of the day, they will have a residual 7 million. You need to subtract that out. Okay, how much you get? 22, right? 22,500, 22,500. So you got 22,500. Okay. And they tell you over the lifetime of the mile, they're able to produce 400,000 tons. Divide by 400,000 tons. And within this year, right? They produce how much? 115. So that's why I will multiply by 115,000. So within this calculation, I will get the depletion expand for the year, for the current year. So 5 by 4 multiply by 11.5. How much you get, everyone? Will be 6, 4, 68,750. So that's in my depletion expense of the year. Of the current year, okay? However, the question, they didn't ask you depletion expense, they asked you the book value after year one. So in order to look for the book value, what will you get? What will you take? I will take 30 million as my original cost. Subtract the depletion that I just spent, 64,687. That will give me 23,531,250. Okay, so make sure that you read question carefully because they give you two correct answers. Two number that you made thinking that it's correct. One is 6468. However, that's a depletion expense. But here they ask you about book value. That's why the answer that you should choose is 23,531,250. Everyone clear? This one is just the same way you do depreciation. Nothing different. Everyone good? Do
Yep.
exactly the same way that you do with depreciation. Okay, so I can move to the next. The next one will be more involved. Okay, so I will clear them and move to the next question. So this question will involve, require A, they will ask you to do adjusting entry, that like the same way we did in the reverse chapter. And the rec B, they also ask you to record the adjusting entry. So we go one by one. Okay, go back to require A. They give you how many? Six transactions. So for first step, they say what? So this Swanson Corporation, they have some transaction involving note payable. Okay, liabilities. That's on we deal with now. So he borrowed 12,000 by signing a note payable he promised to pay within 45 days. And he agreed to pay 12%. So the first transaction, they ask you to record the borrowing of 45 day, 12%, 12,000 note payable from Maple Road Bank. Anyone, what is the account that I should enter here? Anyone know?
Cash and notes payable.
Yeah, very good. Whenever you receive the money borrow from someone, and here in this case, they say that you wrote a note payable. So my cash, I receive some cash in debit. I increase my liability credit, 12,000. Okay, this one is simple, right? The next one. Next one, when the company want to buy some equipment, they don't have enough cash again. They want to pay, they want to buy equipment of 18,000. And again, he doesn't have money, have to go to somewhere, borrow some money. So he wrote a note, or he agreed to sign on a note. Then within 90 days, like 3 months, percentage, 10% interest. What should I do here, G? You pay for your office equipment. What will the entry here?
Office equipment and notes payable.
Yeah, office equipment and payable. Yeah, very good. So I hit my office equipment. No payable. Again, your equipment increased because you buy it in 18,000. Now I hope that you're comfortable with the entry that you need to make, especially these. Okay, number 3.
Teacher, can I check the one again, please?
Cash and no payable.
Thank you.
Yeah. Okay, we move to, that's it 2. Okay, 2, you do office equipment and no payable. And number 3, they ask you to pay, to record the payment of no payable with interest. So on the 20, now you have some cash, right? So
Professor,
you,
can I just see number 2 really quickly?
so you
Okay,
you have enough cash. Now you will pay them. Okay, you borrow the bank 12,000. Now you pay for it. Because you pay for it, I know first stop my cash will be decreased. Okay, and because you pay off the note payable, your note payable will be decreased. And they don't give you money for free, right? They pay you, they ask you to pay some interest. So I have to have the interest expense. So my note payable, I used to owe them 12,000. Now I return it to them. 12,000. However, I have to pay them some interest, right? How much interest I need to pay everyone?
180.
How do you come up with 180?
12,000 multiply 12% and divide by 360 and multiply 45.
Excellent, very good. So I need to calculate the interest here, right? Very good, Chi, correct. So my starting point, okay, I borrow 12,000, right? They charge me an interest of 12%, multiplied by 12%, okay? So this 12% cover for a year, right? 360 days. They give you 360 days. If they tell you, okay, please use 365 days, then you divide by 365. But here they tell you, okay, only use 360. Here, a year, right? 1 year had 360 days. So you divide by 360 days. However, you don't borrow for 365 days, you only borrow for 45 days. So you multiply by 45. Okay, so you take 12,000 multiplied by 12%, divide by 365, multiply by 45. So you will get you get 180, exactly. That's the number that she gave me. So your interest, the interest that you incur, 180. Okay, You pay back principal 12,000. You pay interest 180. So the total cash that you pay out, how much? 12,180. 12,180. Okay, that's how I get 12,180. Everyone follow? You can break out step by step, but here I just sum up. I will do all of them one time. And it's totally fine as long as you get to the correct answer.
Do you see my message, teacher?
Yeah.
Okay, thank you.
No problem.
Teacher, I'm sorry I interrupt you again. Can you click on number one more time?
Okay.
Oh, no. Okay,
Teacher,
thank you.
Yep.
this class will be the YouTube
Record. YouTube. Correct. Yeah.
Okay. Okay.
This one will be recorded, so you will able to visit back whenever you need.
Yes, it's
easier.
incredible. It's
It's
incredible.
easy.
It's helped me all the time. Thank you.
Yeah.
Teacher, are we having quiz next week, next Sunday?
Yeah, quiz next Sunday, review Saturday.
When we're having the study guide?
Study guide should have before Saturday.
Oh, before Saturday?
Yeah. You should have that before Saturday.
Okay, thank you.
Yeah. I will email all of you when it's uploaded. Okay?
Yep.
So that's number 3, okay, everyone? So number 4. Everyone good, number 3? Number 4, what is the next one? So you know how I get the result 180 of the interest, right? So they number 4, again, they have to borrow one more time, right? So he come and borrow from Mike, one of the stockholder, to 50,000. And they by issuing a note payable within 90 days, the interest rate is 15%. Okay, Wenxiu, can you help me with this one? This one very simple.
Yes.
Or anyone can tell me. Except Mariana and Chi. Anyone help me with this entry? Very basic. Wenxiu, you want to give a try? I go borrow money. I borrow 250,000 by issuing a note payable. What account should I enter?
Borrow money.
Borrow money. I go borrow money from someone. I get 250 in cash, and I promise. Note payable and
Cash.
and cash. Okay. How much? Which one debit? Which one credit?
Cash is debit.
Classic debit. Okay, very good. And
Note payables credit.
yeah, sure. Very good, everyone. So no payable. So cash increase. Okay, very good.
Number 4.
And we'll go to number 5. Now, number 5 will be they purchase inventory, okay? And they buy 5,000 inventory from Getman Corporation, and they promise to pay. The company don't use cash to pay yet. They promise to pay within 90 days later. Everyone, please help with this one. What should I do? Which account I should hit? When you buy the inventory?
Inventory? The first
Inventory
one is inventory.
and
Inventory and the not payable.
no payable. Exactly,
Yeah.
very good. And my inventory increased, right? So $5,000
$5,000.
debit and credit, no payable. Very good.
Okay, can I see 4 again? I keep making sure. Just want to make sure I got it. Okay, yeah. All right, I got it.
Number
Yeah,
5.
Mhm.
And then everyone good, right? I will go to number 6. Then this is a little calculation. So you used to borrow, right? You used to, if you look at September 16, when you purchase the equipment, you borrow. I mean, you write a note that, okay, you agree to pay $18,000 within 30 days. Now it's come to the time that you need to pay. So again, similarly with the one that we did, you have to pay the principal. That's number 1. Also, you need to pay the interest, right? Because they don't give you for free. They charge you money. What should I do now, everyone? What should account? Don't talk about the amount yet. What account get affected?
Number 5.
I'm at number 6 now.
Oh, okay.
Yeah. Make sure that they say that the 18,000 no payable mature today. Swanson paid the accrual interest on this note and issue another one. The same amount, 18,000, to replace the note that mature. Okay, so there are two steps here in this entry. Number 1, you pay off the old one. Number 2, you issue a new one. Issue a new note payable. Anyone help? Just tell me kind of like which account will affect.
No payable.
For sure, no payable. Okay. Yeah. Very good. What else?
Interest expense.
Interest
Interest.
expense.
Yeah, because you have to pay them interest. Yep.
Mm.
What else? How you pay the interest? How you
Cash.
pay the interest? Cash, right? So it affect my cash. Okay. And they also tell me that, okay, I issue another no payable.
No payable.
Yeah. So I have to hit another one. Okay, so when I pay off one no payable, I will debit. Okay. When I issue a new one, I credit. That's what you get so far. Okay. Your responsibility is to calculate the interest that you need to pay. So I borrow 18,000. How much the interest? How much percent of interest? The original one. When you borrow it, they charge you 10%, right, everyone? 10%.
10%, 3 months note. Yeah. 10%.
Yeah, 10%. So that's 10% is for how many months?
3 months.
Yeah, 10% for 12 months, right? But here you already borrowed them for 3 months. So I divide by 30, divide by 12, multiply by 3 months.
Mm.
So if you take that, so you get how much? 450. That's the interest that you need to pay for 3 months. So you just simply enter here, interest for 50, interest. And then you pay interest by cash, so 450. Okay, that will be the entry that you make for number 6. Everyone follow?
Yep.
Okay.
Yes.
So I will go to Reg B. Again, the interest will be as the way that we do. You take the principal, multiply by percentage, and then divide by 12, multiply by whatever month that you're looking for. It will be the same way that with every single note payable when you count interest. Okay, require B, and then you can check your work and then you move to Reg B. So on Reg B, they just want entry and they want you to record the interest accrue on the note payable. So I asked you how many note payable that you have in this assignment. How many? How many, everyone? How many note payable that I have in this assignment?
Oh, sorry.
How many?
$12,000.
No,
No,
how many
18.
how many note payable that you have in this assignment?
$18,000.
That's number one. You had three. You had three amount that you need to calculate.
Oh,
You had three note payable. Excuse me. You had three sources of borrow from. So if you look at here, you borrow 12,000 from the bank, right? However, you already pay off, so you don't have any liability here. However, because you see you pay off, you pay already, so this one gone. You have when you bought equipment, you borrow 18,000, right? So number one will be 18,000. How much interest? Right here. 16,000. I mean 16%. 16%. So you multiply. Sorry, let me write again. So basically you have three calculations that you need to make. Number one, 18,000 multiplied by 16%. Right here. Okay. Divide by 12 months. Okay. So how much you get?
240.
240. Interest accrual. That's number one. Number two, you borrow 250,000, right? 250,000 multiplied by 15%. Divide by 12 months. And here, you borrow them in November, right? Because when you accrue it, you need to calculate, okay, November and December. That's mean 2 months. So that's why it will get
6,250.
6,250. Okay. Yep, 6,250. And another note, another liability that you have is 5,000, right? 5,000 multiplied by 14%. Divide by 12. And again, you borrow in December, so you only have to calculate 1 month accrual. I guess I missed something here. So if you do this one, 5,000 multiplied by 14%, divide by 12. You will get 98.33. So I get 58. I'm sorry, 58.33. So I get 58. So you add all of them together. It should be your entry. So equipment. September, October, November, December. Why is it 3 months? Okay, how much everyone get? You get 250, 240 plus 60, 250 plus 58.
I got 6548.
6548. So you will enter the interest expense you pay and the interest payable. Because you don't pay yet, you accrue for it. Why is that? Recorded interest accrue on note payable. Does everyone check is it correct? 6548.
No, not correct.
It's not for it's correct. 65. That means I missed something here. So I guess I missed this one. So 18,000 you borrow in September 16. It's a 3-month note. So September, October, November. So you pay them 3 months later. So you pay them in December 16. Okay. But then on December 16, you borrow a new one, 18,000. 18,000 multiplied by 16%, divided by 12 months. So that give me a month of interest. So the new note they pay, the new note is in 30 days. I mean, next year you have to pay for it. Next year you have to pay for it. So this year. So you have to divide by 2 then. Let's do this one, everyone. Divide by 12. So if you incur on December, oh, okay, got it. Because you borrow on the new one, the new 18,000, you borrow in December 16. That's why you only able to take half of the month. You cannot take the full month. Okay, so that's why you have to divide by 2. So my apologize, this number should be 120 instead. So if you take 120 plus 6250 plus 58, then you get 62.40, 64.28. And you check the work. Hope it's worked now. Yeah, it's correct now. So I missed that part because you borrow at the middle of the month. So you're able to, you just need to accrue half a month only. You don't take the full month. Okay, everyone. So 120 instead of 240. And then you take 120 plus 62.50 plus 58. That's how I get 64.28. Okay. Everyone okay? Everyone?
Yes.
Okay.
Okay for now, teacher.
Yes.
Okay, for now. Yeah, sorry, I missed the first part because I forgot that we borrow in the middle of the month. If this one is December 1st, then our number is correct. However, because we borrow half of the month, so we only calculated interest half a month only. December 16 to December 31st. That's why I divide by 2. Okay. That number 3. So you get the entry. Okay, so number 4. Number 4 will be longer and more calculation involved. Number 5 too. So number 4, the first one, read the instruction. So this company on December 1st, they signed a 30-year, 1,080,000 mortgage, no payable to Johnston Town Bank and Trust because they tried to purchase the building and land. So basically, okay, the company want to buy building and lands. That's why they go to the bank, borrow 1,080,000. So the bank say, okay, I lend you this kind of money. However, they will charge you 12%. So basically 1% per month. And the note is fully amortized over 360 months. So they give you a amortization table of how much you pay every single month. If you see here, the bank send the company amortization table showing the allocation of monthly payment between interest and principal over the life of loan. A small part of this amortization table is illustrated here. For your convenience, amount have been routed to the nearest dollar. So every single month, right? He pay 1,110, in which, look at October 1st. This is the original loan, see, 1080, that's this number. October 1st, he paid 11,000 something dollar, in which this is interest, this is principal, and this is the same way, same concept. They ask you to record the monthly payment on mortgage. And they give you 2 months. They ask you to do one in October 1st, which is here. Right here. and another one in November. If you look at here, the total cash you pay out is that much. However, this much will go into interest. This much go to in principal, and similar work similar way with the other one. So they already give you the number. Your task will just do the adjusting entry. So I pay cash. How much I pay everyone? Sujitra?
1110.
1111. Yeah. 11 and in which the interest expense is 10,800 and the
Mortgage
payable reduced because you pay some portion to principal, so your loan reduced 310. Okay, that's easy, right? So they already give you the amount. What you need to is pop up into the correct number. I mean, to the correct account. And the next one will be similar, okay? Wenxiu, can you help me with this one, Wenxiu?
Yeah.
Very
I'm
similar,
still working on
totally similar what we just did. You look at here, November 1st, how much you pay?
November 1st, I pay.
Right here, they had 3 numbers. So just tell me these 3 numbers, which account should go to?
Cash is 1110.
Yeah, credit or debit?
Is credit.
Very good. Okay, what next?
Next is
how much interest you pay?
interest. I pay 10797.
Very good. And how much principal I pay?
313.
Which account I should hit?
Is that mortgage?
Mortgage payable. Excellent. Very good. Yeah. So that's similar to whatever you did at journal entry 1. Okay. Very good. Thank you, Wenxiu. Yeah. $16 months. So I move to Rec C. On Rec C, they ask you to complete the amortization schedule. Okay. Rec C, complete this amortization table for 2 more monthly installments. Those are due on December 1st and January 1st, December 1st, 2021 and January 1st, 2022. So I know that every single month they pay the same amount, right? They will pay the same amount. So the hard part is, okay, how much will be allocated to principal? How much will be allocated to what? To interest, and how much to be for principal? Anyone know how to calculate this one?
I did use math, teacher.
You do what?
I took like the first one is 10, 80, 800, the next 10, 797. So it's -3. Swear to God, I did right there and it worked.
And it's correct, right?
Yes.
Yeah, that's exactly what we need to do here. Yeah. So if you see the difference between, yeah, that's exactly, I thought we should have another way to do.
I think is interest expense is calculated from unpaid balance 10%.
Yeah, so if you see here, Bijabat, right, Bijabat, what you said again? The difference between Bijabat. What did you say? Lou.
I said interest expense calculated from unpaid balance 10%. Did you see unpaid balance?
Question.
Yep.
Oh yeah, the interest is 1%. Okay. So what you need to do here is you take.
I'm sorry. Yeah, 1%. Yeah.
1%. So 1% of the unpaid balance, right? Yes. Okay, let me per month 10977. Oops. Exactly. Yep. Because they tell you here. Thank you, Bijabat. So they tell you here the interest per month. Per month is 1% because 12% per year, 1% per month. So you know that the monthly payment assuming are the same. Interest will be tax 1% each. So 1% multiplied by unpaid balance 1079377. So the interest you should get is 10,794, right? I know my interest that's much. I pay the total is 1110, 11 and 0. So I took 11 that minus 10,794. So you get 316. That is the principal you pay. So right here, 10,794 and 316. So for this number, I will take one to count out the unpaid balance. You just take 1079377. Subtract the principal only, 316. That's how you get 1079,061. Okay, so you do similarly again, take this one, multiply by 1%. So what I did would have been, and then 319. So you get here will be 107877. That will be your answer. Nó vô hoài gì? Hả? Nó vô hoài vậy? Nó vô hoài mà em mới vô. Dạ nhớ. Bài sao? Nó còn nhạc ngồi luôn nha, chú nói em. Tương lai nhờ nhà vợ. Ủa, có 2 này nữa. Cái gì lỗi số 5. Mà số của chị là 05. Nên là chị là vậy chắc mới giới thiệu được cái 50. Nhỏ đi. Everyone, so that's require C, right? Can I move to require D? Let me remove all of them.
Oh, Professor, can I just quickly see B again?
Huh?
Let's see. B. Can I just quickly see B?
B?
Again? Yeah. Did I get that correct? Cash. Yep. Okay. Thank you.
Yeah. Okay. The last one of question 4. So they ask you, will any amount related to this 30-year mortgage be classified as current liability on the balance sheet? Yes or no, everyone? Yes or no?
Yes.
Why? What is current liability? For sure it's yes, because current liability is mean the amount that you pay within a year. And if you see here, per the calculation, you pay some principal back. You borrow September 1st. However, you pay some from
Okay. Yes, I see.
November, yeah, 2021.
Yeah, 10,800.
Yeah, that's why.
10%. Yeah.
That's why it's a current. And the rest, whatever pay over 1 year, it's classified into long term. So the answer is yes. Very good. So we only have one left. Okay, we'll try to finish this one today. So why don't we move to question
Oh, sorry,
5?
Professor. Can I see B? Sorry, number 4. Could I see B again? Oh.
CB4?
Mm-hmm.
You mean question 4?
Question 4. Yeah.
B? Or C? That is C.
B.
D just yes, so you just hit yes.
No. Oh no. B. B. Like basketball. That's the. I'm sorry. It's the November charge. Sorry, just one moment. Okay.
Mm-hmm. Yeah. Anyone else before we move to the last question? Anyone need me to go back to B, C, D, whatever you want? Okay, if not, I will move to the last question, okay? So the last question will ask you to calculate the bond, right? They will deal with bond. The last one will deal with liability, no payable. Now they ask you to do bond. Okay, so why don't you just read it through? I will be right back.
The election is not over. The election is not over, and we are all doomed. We are all doomed. Do you understand? And this is why. Van Jones, which is from CNN, big lefty, right? Democratic strategist, you know, commentator, whatever. He made a video, okay, talking about what happens on elections.
That's
Everybody says years and years and years, the loser concedes the election and that's it. But if they don't concede, which Donald Trump is not conceding the
Okay, go back to our projects, okay? So on September 1st, 2021, this company issued 80 million bond payable. Interest is payable semi-annually. So every single year, you pay interest 2 times, one in March, one in September. Bond discount and premium are amortized at each interest payment day and at year end. Company fiscal year, December 31st. Okay, that's all the information that you need to know. So question A, 1, prepare the necessary adjusting entry at December 31st and journal entry to record the payment of bond interest on March 1st, 2022, under assumption that the bond was issued 98 at 98. Whenever, okay, you see it, you saw it, issue at 98, I know that they issue at discount, okay, less than 100%. So 98 less than 100. So that's, I know that bond issue at discount. So when the bond issue at discount, there are 2 items you need to calculate. One is the interest, another will be the discount amortization. Okay, so why don't we do it now? They ask you to record the accrual of bond interest for 4 months. Okay, this have 4 months. Why 4 months? 4 months in December in 2021. December, October, November, December. Okay, because you borrow from September, so you count September, October, November, December. That will be 4 months because your year end is December 31st. So the first step will be, number 1, you borrow $80 million, right? 80 million. 80 million. How much the interest? 10%. That's a year, right? Divide by 12. And they ask you only calculate for 4 months only. So multiply by 4. Almost everyone got? $26. I mean 2, 6, 6, 6. 2 million, 6, 6, 7. That's the interest. Okay, that's the interest. That's not the answer yet. You have a couple more steps to do. So when they say that they issue at 98, they issue at 98, that means they give you 2% discount, right? 2% discount. So what you need to do here is 2% discount multiplied by the whole amount. Okay. And the bond discount must be amortized within the life of the bond. So divide by 20 years. And here they tell you calculate for 4 months, right? So that will be your calculation. $26,667. Okay, now you take this one plus this one to be your answer. So I take 26,667 plus 26. So you get 2,693,334. 2,693,000 and 2,693,334. The number is so long, but that's your answer. So over here, interest. So the bond interest and discount that you get, and then bond interest payable. Okay, so you hit debit 2,693,334, in which discount is 2,667, and the bond. That's your answer. Everyone follow how to calculate it? Everyone quiet today? Yeah?
Yeah.
I know the number is big, but that's how you calculate the interest. Okay, can I move to the next question? I can clear the calculation, okay? It's a lot of number here. Basically, that's your answer. You can check the word to see if it's correct. Okay, the next one. Record semi-annual bond interest payment and interest expense for 2 months. Now, the previous one, they ask you, why for 2 months? Record semi-annual bond interest payment and interest expense for 2 months. So you need to record bond interest payable, bond interest expense, the discount that you just get, and the cash that you really pay. Because they say you pay for it. I mean, you hit cash. The easiest way you can do is that if you look at here, this is 4 months, right? They ask only 2 months, so you just divide by 2. Yeah, just divide by 2. So because they give you here, the previous question, they add 4 months, now they ask only 2 months. So the fastest way, just divide the amount into 2, okay? So my bond interest payable, 26. Bond interest expense. So my bond, okay, I start with my bond interest expense. Bond interest expense, I take this amount to 693 divided by 2 to 693,334. So I get 1346667. Basically, I took this amount, divide by 2. Good. You see the amount of 4 months. Now they ask on you 2 months. So that's why I divide by 2. Similarly, do with discount, divide by 2%, 2 months. Okay, so that's the discount amount. So what I get here is that the discount 13,334. My bond interest payable, this much. So if you do a calculation here, you will see 266,667 plus 13467. 13. So that should be 4 million. So the way I get 4 million is I take 266,667 plus 1346667 minus this amount 13334. That's how I get 4 million. So basically, this entry tells you that at the end of the day, you have to pay $4 million. Okay, that's your entry. Everyone good? I move to the next one, okay? If no question.
Okay.
Require A, you will do similarly. However, they tell you instead of they sold at 98, now they sold at premium. They sold with the price rather than the amount on the note payable. So it works similar way, except step 1, you need to do step 1, 80,000, 80 million. Interest 10%. Divide by 12 months. and they ask you for 4 months. Okay, for 4 months. That's why I multiply by 4. Again, this amount will be equal to the one that we did on rec A1, 266, 6, 6, 6, 7. So the first step will be the same. The difference is just on the bond premium. So bond discount, add bond premium, subtract. So you take, because right, they pay, they issue 1% over the price. So 1%, because you take 101 minus 100. So that's why 1% multiplied by 80%. I mean 80 million, 80 million. Divide by 20 years. And then it's a 4 month or 12 month. So this will get you $13,333. Again, discount, add, premium, subtract. So I will take 266,667 minus 13,333. So I will get 4, 3, 3, 3, 5, 6, 2. That's how I get, okay, 2,653,334. The number they give you not even, that's why you have a lot of number on your calculation. So similarly, my interest premium expand, my premium on bond payable and bond interest payable. 266. I mean 2653, 334. No, 2666667. That's my total interest need to pay. My bond interest. That's my interest. It's in my discount. Premium. So it's kind of work opposite way. So you enter your interest, bond interest expand, premium, and then bond interest payable.
Teacher move seatbelt. Teacher, can you move the seatbelt? Yeah.
Can you what?
Can you move?
You move what?
Yeah, thank you.
When you move the, you move the, so that you can see the number?
Mm-hmm.
Okay, so you all set? I move to the next question, okay? The next one was just similar to whatever we did. So they ask you to record the payment of bond interest on March 1st under assumption the bond will issue at 101. So basically, you need to do the same way that we did before. Basically, record the payment of bond interest for 2 months. Okay, so the entry similar at bond interest payable, bond interest expense. Then you have premium. And then you have cash to pay because they tell that they pay for it. So you have to enter here whatever bond interest payable, 26667. Okay.
Sorry, just give me one moment. Can I see it?
Which one? With this one?
Hmm?
And bond interest expense will be half of the amount that you need to pay, right? 1, 3, 6. Bond interest expense half of the amount. So I saw that my bond interest expense is 2653. I divide by 2. So I have 1326, 667. So basically I just took this amount divided by 2. The premium, you also need to divide by 2. So 13 divided by 2, 666. And then, to calculate the cash, it's just total debit. So you took 2666, 667. Oops, sorry. So you take this, plus this, and plus this, and you will get the total of 4 million, right?
4 million?
Yeah, 4 million. They give the number so big that you have to deal with so many figures. The total is 4 million. Okay. So, why don't you just take the lunch break, and when you come back, I will continue the rest of the chapter, the rest of project 6. Okay, we'll have more calculation for B and C. I try to do it, but I think, yeah, just come back and we will finish project 6. Okay.
Okay.
Everyone.
Yeah,
Enjoy your lunch.
teacher.
Yeah, enjoy your lunch, everyone.
Teacher?
Break a room, right?
Yes, please.
Oh, no. Open the room.
Sorry.
Marreta tá comendo sorteio. Toc, toc, toc.
They're rebuilding their house upstairs. I'm all day like that. I can't even talk.
Batendo bife.
Hold on, okay? I need to, hold on. Close. Room 1. Room 4, okay. Ariana. Fernando.
Socando alho.
Leo. Ariana, Maxwell. Riva. Polo Henrik. Rosian. Hassan.
Parou eu.
You see, right? You see,
What stage you should
Okay, everyone, continue the rest. Okay, continue the rest of your.
Hi, you. How are you?
Good. How are you?
Good. I'll go to the beach now.
Oh yeah, that's true, huh?
Yeah.
Yeah.
Today is like summer.
Yeah. Hopefully this winter, this fall will be warm. Is it next week warm too, right?
Yeah.
That's good. It's much better than the than last week.
Yeah, the last week, last Friday was terrible.
Yeah.
No, this one.
Snow.
The other one. Oh my gosh, it's snowing.
Yeah, yesterday and today very warm. This year so strange, huh?
Oh, this is the number 1.
Okay, so we do number 5.
Let me just
And
drink your water.
Require B, okay? So for require B, they say compute the net bond liability at December 31st, 2022, assume under assumption A1 and A2. So assume under A1, the assumption was that the bond will issue at 98, and A2, the bond will issue at 101. Okay, so the second one will similar. So we do one, and we apply the next one. Okay. So the first one under A1 assumption, they say they sold at 98, right? So the original, so let's say bond is sold at 98. Okay, so when it's sold at 98, the first, your original bond payable, 80 million, right? 80 million. However, because they sold at discount, so you have to subtract out the discount minus discount. Discount. And the discount that we calculate so the amount that you amortize, okay. So they asked this year, up to December 31st, 2022, right? So you have 2 portions of the discount. One portion is the couple months of the 2021, and the second part is the whole year of 2022, right? So the discount will have 2 portions. One of them belongs to the year 2021 and the whole year of 2022. Whole year 2022 is easy already because because discount it's so at 98%, so that means it's 2% discount, right? 2% discount multiplied by 80 million. 80 million. So you get the discount for year 2020, 22nd will be 1,600,000. by 20 years, right? So 1 year it will be 80,000. That's the discount for year 2022. If you look back on your require A, if you go back to require A, you will see that your discount amortization for the 4 months because you start from September, right? September, October, November, December, 4 months. And the discount that you already calculated is how much? 26, 667. Okay. So if you add these, if you add this one and this one, you will have a total of the discount of 106,667. Okay. So your discount originally so you start with 80 million, I'm sorry, 80 million. You have just minus original discount. That is the total of the discount. Subtract the one that you have on 2021. Subtract the discount that you have on in 2022. Then you will get the value of responsibility, the bond liability at the year end. So if you take 80 million minus 1,600,000 to 6667, 106,667. So you get actually this one should be 107. Sorry. Sorry, confusing you, but my starting point is 80 million. Minus the discount that you have. One six. One zero six. 667.
Are you okay, teacher?
I'm sorry. Yeah, my sister do something weird. Okay, so that's why I get. So if you do the math here, this will come at 10667. So I have here is 1600 1 plus 106,667. So it will be this amount only come up with 1,493,333. And then you take 80 million minus 1,493,333. The answer should be 78,506,667. That should be your answer. So what I mean is after at the point of December 31st, 2022, the remaining liability for this bond is 78,506,667. Okay, so that should be your answer. 78,506. So when you have the discount, you have to subtract it out. When you have a premium, you have to add it up to figure out the net bond liability at the end of a period of time. In order to calculate 101, so the bond, so at 101, at 101, so your starting point is the same, 80 million, okay? I have my 80 million. Now you have to calculate the same way. What is the premium that you have for the last 4 years of 2021 and then the full year of 2022? Okay. So what we start here? If you look back on the entry of required 2, you looking at the bond premium. I don't have here, but the bond premium that you get is 13 something, 13,334, right? So that is 2021 premium. Because only for 4 months, so that's why you have only 13,333. For 2022 premium, because it's a full year, it will be easier, right? 1% over of the price, so 1% of 8 million is how much? 80,000, right? So my whole year of premium 2022 will be 80,000. I take 13 plus 80. I will get how much? 13 plus 80. So you get 93. 93,333. 93, 3. Oh, I forgot to divide by the year because that should be the amount of every single year. My bad. Okay, so divide by 20 year. I know this bond is not easy, difficult. So 40,000. 40,000. 40,000 plus 50, 13, so you get by 3, right? 3, 3, 3. That the premium amount that you get amortized up to December 31st, 2022. The last stop we will do is that my starting point is 80 million. Sorry. So my starting point, 80 million, right? Whenever you have premium, you have to add it back, add it. Original discount is 8%. I mean 1% of 8 million. So that's 800, right? 800 minus the amount that you already have, the amount that you already used in 2 years, 4 months of 2021 and the whole year of 2022. So you get A0 746 667. So you can see that because it's issued at premium after almost 1.5 years, although you issue at the price 80, but you issue its premium. So that's why the liability that you still have greater than 80 million. Okay. Vice versa, on the first one, you issue as discount. Okay, although your notes say, okay, you owe 80 million. After 1.5 years, that amount become less than 80. So the answer you should enter here will be 8746. So that will be the question B, required B. So the last question, they will just ask you for Rec C, under which of the following assumption would the investor effective rate of interest be higher? Anyone have the answer? So they ask you, in which case of 98 or 101, what is the case that the investor effective rate of interest is higher?
I'm sorry, Professor, could you just go back to B just to see? Thank you.
Yep.
I think it's 98.
Why?
Because if you are investor and if you initially if you need to maybe pay invest like $1 million, you just need to pay 98% to the company, and but you still get the interest for $1 million, right?
Yeah.
For interest.
Yeah. Concept. Yeah. The concept.
That's what I think.
So if you look at if you go back to Rec A and Rec B, you can tell it's easily in terms of on the Rec A. If you look at go back to Rec A, how much the interest that you as investor you get after 4 years? I mean after 4 months. Or you can tell easily in terms of, okay, as a on the Rec A, right? The bond interest expand for the investor or for the buyer, for the company when they issue a bond to you, they had to pay you 2,693,000 compared to the interest that they had to pay on 2653. When they pay higher in the case one at a borrower, that means the people who lend you, they get more money, right? So that's why when they issue under discount, the investor get more. then when they were issued as the premium. Or just simple add, okay, the products they sell is 100. The seller agreed to pay to give you two options. Either, okay, they will give you a discount, you only have to pay 90, or they will charge you 101. For sure, the case of 98, the investor, instead in the standpoint of the investor, they prefer 98, right? Because they have to pay less money. For 101, they have to pay more, like 1% more to the company. So that's why the answer should be 98. The investor is better off. Okay. So that will be project 6. Any other question? So in terms of projects, you only have one left, okay? And we will do that after the quiz. After the quiz, you do that. For now, I guess we have half an hour. I will use that time to look through the look through the quiz. How is it look like? And for the time that I'm doing that, you can use half an hour left to either finish project 5. I know project 5 I didn't go through again, but we already have video, so you can revisit that to finish project 5. And whatever pending of for project 6, you go ahead finish so that you can submit it. Project 6 will be due in 3 days, okay? November 11.
Teacher.
Yep.
The test will be from chapter.
The test will be the test will be chapter 6. For your review, there are 2 parts from chapter 6 to chapter 10. So if you click on mark right here again, you can see that they already.
Can you do the review?
Huh? Yeah, go ahead and do the review. Right here, if you want to review during the week, feel free to do it because it's already on Connect and you can use it.
So this is the last test that we're gonna have. We're gonna have.
No, we
more?
have one more. We have one more. We have one more quiz. Unfortunately, we have one more quiz. So the second quiz covers chapter 6 to chapter 10. If you go to macro here, they already give you the review here, chapter 6 to 10. So you click that, go through as much term that you have, so that it will be a refresh for you. And
Teacher, so the test will be multiple choice?
Multiple choice, yep, multiple choice, true and false, and yeah, multiple choice. Half, multiple choice, half. Some of them will be true and false. Okay, same, just similar the way that we do on quiz 1. Okay, so I can just turn up this way so that I can see how the quiz 1 look like. For your
teacher, leave it.
No. The reason I don't do it early because these questions
No, the teacher.
maybe change,
Okay.
so that's why. Okay. Again, project 5, the YouTube link ready for you to watch. So you can feel free to go ahead, look it back and finish. That's number 5, project 5. Project 6, if you don't understand after today, after we're done, maybe before tomorrow or tomorrow morning, I will post it, post today recording. So you can follow.
So the YouTube can be ready tomorrow?
Yeah, early tomorrow.
Okay, all right.
Or tonight, yeah, just say early tomorrow. I may do it tonight, but just for save early tomorrow. Usually it takes a couple hours to convert it. Okay. Any other question, everyone? We're almost done. We have 4 weeks left, right? With one quiz, 2 more quiz, and then 1 capstone, 1 project. Yeah, so I will use this, so you can work on whatever you in the middle of, and feel free to message me you have any question. Okay.
Okay, thank you.
Yeah.
About the videos on YouTube, I would like to say thank you, because Sunday I was not feeling well and I couldn't finish my project because I could find on YouTube.
Yeah, sure. Anytime.
Thank you.
Yep.
Teacher, so the class like done for today?
Yeah.
So just
you,
stay
you
here.
continue. Yeah, you just continue what you're working on, and yeah, you can do. This year, you can use the time what you want to do. But yeah, I will not go through any other content. So the next Saturday, first stop will be review, and oh yeah, I have to see what we do next on next Saturday. So next Saturday when you come, I will do the review with you for quiz 2. Let me look at the syllabus. Maybe 10, so it should be 11. Next week will be 11, 15. Okay, so we still review. We still review and chapter 8, 9, 10. I already went through. We still review and chapter 11. That's the goal.
Are you gonna give chapter 11 before the test?
No. You mean the review before the review, or
no? You're gonna do like chapter 11 on Saturday, right?
Yeah. We do the chapter 11 on Saturday, and the Word document that we review. We will repair. I will repair and I will go over with you. We're supposed to do capstone 3, but I don't want to start because for sure that we cannot finish. And you had a quiz come in, so I don't want you to do capstone 3. So theory chapter 11 and the review for quiz 2.
When are you gonna do the capstone 3? After the test?
We have Friday. Yeah, we have one more Friday, so that's the time that we can do capstone. Okay, we have extra time.
Oh, okay.
Because the reason I don't want to
have 4 more weeks, teacher. I think it's
4 more weeks.
We have enough time.
Yeah, we have. And the reason when we start capstone 3 Saturday and then we cannot finish, and then 1 week later you come back, you circle back to capstone, just rather than just put up. It's okay, we have enough time to do it. So that's why I don't do capstone 3.
When is the next Friday?
The next
class?
Friday will be November 20th. After your quiz, you will have, so the 20th Friday.
And we don't have class on the 28th, right? 29.
Yeah, that's Thanksgiving week, so you have 1 week off, unless you want to go to school, Mariana. You
No,
want to
teacher.
go? No, teacher.
No, if you want, I can be there for you.
I'm just kidding. Yeah, so you have 1 week off. That's why. Okay. Yeah, you should be in the good shape of. Okay, we only have 2 items left. No, 3.
2.
Project 7, capstone 3, and then quiz 3. So we have 4.
Okay.
I mean, we have 3 items left. That's all. So your focus now is just quiz 2. Okay. Don't worry about the rest. The rest we will do it after quiz. Specific point. Perpetual. Standard sign. I will email you when the review ready. Okay, I'll try to do that.
Okay.
So that you have something. Mariana, just email me which question you're not sure. I can show you.
I actually finished, but I don't know if it is right.
Correct.
I can email you. I can send you the file and you can check, but
no, that's fine. No, I don't think I will check until later. So you.
Yeah, like I don't think it's wrong, but I'm gonna wait for you.
Yeah, no rush.
Yeah.
Is it hard, the last one, Mariana, or is it long?
The capstone?
Mm.
The capstone?
Yeah, the capstone.
No, it's not long. It's shorter than the second one.
Or even shorter than the second one? Much shorter than the first one, right?
Yes.
One short, the first
we
one.
We have only two tables, and like the income statement, it's pretty short.
That's good.
The statement of retained earnings, it's short too. And the statement of financial position, it's very short. I thought would be more things to do than because like when you do the capstone one, we think, oh my god, like
it's a nightmare
about the rest.
Project 1.
But
yeah, nightmare.
Yeah, it's gonna shorter. So now it's even
you're done, right? You have nothing to do next week. Just kidding. Have you done 7?
No, I don't.
Yeah.
It's fine.
Yeah, you work really hard, so you can give you your time.
Yeah.
You a break, yeah.
Rodrigo, cadê o Léo?
Esse filho da puta, rapaz. Ô, Rodrigo, filho de uma rapariga, viu, bicho?
Leo, what you say? You say bad
Oh.
word, right?
Sorry. Yeah, I said a bad word.
Yeah,
Sorry about that.
I understand.
I'm talking with Rodrigo.
Did you understand that?
Where
Poquito.
do you
You.
learn that?
Or you? You?
Yes.
Did you understood? You
No,
understand
no,
this?
no, I don't. I'm just
No?
kidding. No. I say bad because I know that Leo usually say bad word. That's why.
No.
Leo say bad words, that's why.
He's a bad guy.
No, he's good. Except he
You have
very
a good reputation, Leo.
Leo very famous among the very
I-
famous.
I just
Yeah.
said the Rodrigo nickname.
Leo, how long you been at CSI, Leo? Almost 5 years.
Almost 5 years.
Yeah, exactly. I guess you start at the same time with me. Is it 2000?
Yeah.
2015, right?
15, 16, I'm not sure, but
So
maybe
you came to the US 5 years ago too?
who?
How long you been to the US?
5 years the same.
Oh, 5 years. Okay.
Yeah.
How you
because,
know the school? How do you know the school?
All Brazilian does, teacher.
Yeah, exactly. Adson, quantos anos você tem que você tá aqui?
I'm a senior. I'm
You
a
come
senior.
the same time with
Aí eu tô conversando com o
Edson.
Adson, tô esquecendo o Rodrigo aqui, ó, aqui, arrombado.
6.5 years.
Sydney, maybe 9.
6.5, Edson?
Yeah. I need just to understand English. The other thing, I understand very well. My Portuguese is 100%.
Good, right?
Yeah.
It's like we're born there, right?
What a smart boy.
No, Leo is good. I know
Oh,
he's
6 years.
good. Except he's very talkative. That's all.
Leo is the best. Right.
Yes, sir.
Leo is the best of all peoples.
You
All
mean Leo?
peoples.
No, yeah, Leo is good. I know Leo is good.
All pupils.
I'm just kidding here. Just
The
kidding.
best of all peoples. And also Leo know all peoples at CSI.
He is a senior. The oldest on the CSI. Sydney, Leo. I'm not. Flávio. When did you start teaching English in CSI?
I start 5 years ago. I started the same time with
2015?
Yeah, 2015. Yeah.
Did you start with ESL or?
I start with ESL.
Yes, sir.
That's where I saw Leo and Esson, I know, and then after a couple more people, but I guess they're already gone, right, Esson? Some of them,
Yes.
I don't see them here anymore. Either
I think the people in this class, just Leo, Sydney, Flavio, Tatiani.
Yeah, Tatiani too. Tatiani,
Yeah,
I have her
Tatiani.
another class.
Yeah, it started in 2014 or 2015, 6 years ago.
Daqui a pouco eu vou lá fora.
I left CSI and you guys enter, I think.
Oh, so you attend and then you left and then you come back.
Yeah, when I first came here, I came to start on CSI and I did like beginner, intermediate, and advanced, and I left CSI for 3-4 years.
Yeah.
Even 5 maybe. And then I came back. Sorry guys.
So you no, that's okay.
Is that Adam's family?
They're rebuilding their house upstairs.
Oh, they do the whole day, even Sunday, Mariana?
Yes, because the owner of the house and his father-in-law, they are working, so it's the owner. They do the job. So they be here like since morning till late night and every day. But they just started on Friday, so I guess I will have more days with them. Bother.
Porra.
Fala a palavra.
Teacher, so I'm gonna leave the computer.
Yeah, you can mute your computer. That's
Okay.
fine. So we don't have to know. That's
Thank you.
Yeah, thank you, Mariana. Anyone
Bye,
have?
guys.
Okay. See you next week.
Caralho. Toma, tá. O goleiro é um foda, velho.
Vocês estão jogando aí?
Pega lá, pega lá.
Filha da puta, rapaz.
Vou almoçar lá, depois ele joga mais.
Lá, passar soco no serrota, passamos daqui.
Leo, do you want me to? Leo and Mason, do you want me to add the room for you? Create a
Sorry?
room? Do you want me to create a regular room for you?
Well, doesn't matter.
Doesn't matter. It's matter, right?
Yeah,
Okay,
sure.
I already opened you a room. You can move in.
I want to talk with my friends, Chinese friends, Thailand them. But okay, I go.
Okay, everyone, I already created a room for you, so you feel free to join the room. Okay.
Let me move.
everyone. So I post the review for you in advance right now. So where you can find is you go to, let's close it.
Thank you.
Okay, everyone. So you go to, give me 2 minutes. I show you where
Okay, thank you.
I just post the review. I don't give you the answer, so you can use. I mean, you have a time. You have, if you have time, you can start working on that. And when we will correct, I will correct on Saturday. Okay. Okay. Bye, Richard. So if you go to let me share the screen.
Did you post it in the content, teacher?
Correct. Yeah, I post right now. If you go to edit, upload file. Yeah, so you should see the file name quiz 2 review Saturday and Sunday class. That's your. So they have 2 portions. One is true and false, and one is multiple choice. And you can work. This will be your assignment. Okay, and you can do that, and I will correct on Sunday. I'm sorry, on Saturday. Enjoy the rest of the day, everyone. See you next week. Okay.
Okay, see you.
Okay, bye.
Have a great weekend.
See you.
You too.
Have a good week.
You too.
Have a wonderful Sunday.
Everyone, again, the review already posted for you. You can work on that, and we correct on Saturday.
Okay.
Okay. Okay. Bye, everyone.
Bye bye.